afternoon. This is Mr. Not Advice. It is Monday, July 27th, 2026. This is my end of the day update. As always, this is for entertainment and education purposes only. All right, so here we go. Taco strikes again with Trump halting strikes to try to give diplomacy a chance here today. Oil sank because of that as the U.S. paused on about almost 2 weeks of daily strikes against Iran. Um, Trump said in an interview with Axios, however, by the way, is somewhat suspect in some of their news releases, but he said he decided to pause strikes to give negotiations another chance. Iran also signaled it was going to refrain from any retaliation as it held talks with Oman over the Strait of Hormuz. So I think Goldman's Rich Privorotsky summed it up. Perhaps it was the backup in long end yields, perhaps the slight wobble in credit, but the operating model remains the same. There is a high degree of reflexivity within the administration's policy framework. Every meaningful spike in energy prices or sell off in financial assets eventually elicits a de escalatory response. That's why the market largely looked through the conflict to begin with and why it will likely continue to do so now. The next phase becomes a long and messy negotiation. End quote. Taking a look at the at stocks today, and by the way, oil was down 8%. Front month futures dropped around 8%, briefly testing an 81 handle. Its biggest daily decline since May 20th quickly faded the early gains which were tied to an overnight drop in oil prices. Small caps and the Dow managed to hold on to decent gains, while the Nasdaq lagged and the S&P clung to unchanged. Once again, we've got tech being an issue. Goldman's Chris Hussey put it this way: the stall in the S&P rally we have experienced for the better part of 2 months now is tied to more concerns about the durability of the AI infrastructure trade more than concerns about oil rates or inflation or pretty much anything macro. We look at the S&P 500 today, both Mag 7 and 493 gave all of their gains back, with the former a slight laggard, which or wiped this early bounce. And that's again with oil much lower over the weekend into today's open. Nasdaq was the hardest hit of all the majors as the entire AI complex came under pressure from all directions. The S&P XAI was up 0.8% today, notably outperforming the index today. And that's this line right here. Semis were slammed today as China memory maker CXMT opened up dramatically higher, I think over 490% with its IPO. And this is a DRAM producer. So that's part of the reason why we saw such a large sell off in ASML. If we look forward, and this is very important from a technical perspective, CTAs, commodity trading advisors, and so we're talking about professional managers that do not buy single stocks. They're buying futures contracts, derivatives, options, indexes. They will buy, but they have flipped short on a short term basis. So if there is a flat tape over the next week, CTAs are sellers of $5.96 billion worth of U.S. equities derivatives. If there is an up tape, they are sellers of 2 billion out of the US. And if there is a down tape, they are sellers of 15.1 billion. So at least one of, so you've got hedge funds, long only funds, and CTAs, at least one of the three is going to be a seller no matter what this week pans out in terms of the indexes themselves. And we have a heavy week this week ahead of the interest rate decision as well as some mega cap tech earnings. Goldman's desk today said that the overall desk activity was quiet, with it being a 3 out of 10. Long onlys were 13% better for sale, led by the most traded stocks as well as consumers. Hedge funds, however, were plus 8% better to buy, led by healthcare and consumer discretionaries. The Goldman traders described today as an unwindy tape to start the week. Momentum continues to extend Friday's losses, taking out last week's lows. But interestingly, the 12-month winners right here, so those stocks that were up the most the last 12 months, We're down dramatically while the 12-month losers are squeezing higher. Seems to be a value rotation going on right now. Software was the best performing sector today, while semis was the worst. This is the software versus semis pair trade. As I have been saying over and over again, we need to continue to watch AI capex spend and more importantly, how the debt market is treating hyperscalers, especially with the latest NVIDIA circle jerk of financing. Hyperscaler credit risk continues to explode higher. And that's something I've been discussing at least for the last month. As that continues to happen, you're going to see what, remember, it leads to higher interest costs for hyperscalers, which is rippling through the investment grade corporate bond market, but it's also putting pressure on hyperscaler stocks as well as its suppliers, their suppliers. Looking at the interest rates, the yield curve continues to flatten, but this suggests that the yield rise that was recent was not an inflation scare. And I'm going to get to that very shortly. I expect this week that there'll be more dissensions, which will set up a possible rate hike in August or September. However, I think, again, that would be a major policy mistake. Market inflation expectations continue to decline, which is interesting because while they're declining, the market expectations for a hike have stayed largely elevated. The Bloomberg Dollar Index today remained unchanged, recovered from very early morning weakness. Gold was able to hold some of its gains today, but it couldn't hold above the 4,100 level. Bitcoin dropped today. It was a choppy trade today, but is up notably from late last Friday. ETIG today put out a note that they believe that there is a structural overhang for memory pricing. There is meaningful downside that could happen in the semiconductor index with at least another 24% down, according to BTIG, which is what they believe is the more likely outcome in the coming weeks. Of note, most tech investors are not prepared for this type of drawdown were it to occur. As I said earlier, high beta momentum continues to be sold off, and it also is nearing its 200-day moving average. And if that breaks, then it opens the door towards the March lows, which would be another 23% down. So where do you hide? Well, healthcare XLV has been outperforming, and it is trying to break out of its year to date trading range. Looking at the overall market today, as I said, we did have EOSE able to put in a green day today with below average volume, slightly below average. Let's call it about 12% below average. IGV, which is software as a service, you can see on these charts here that even though we're getting bounces, it's not tradable at this moment. On IGV, which is the software ETF, we've got the 50-day above us at about 2% higher, and then the 200-day above us at about 6% higher. So there's quite a bit of technical overhang, which is, I think, that's what Goldman was mentioning earlier. The Russell 2000 today, the candles today are fairly ugly. Lots of dojis being put in today, which screams to me indecision. While we do have technically another bounce off the 50-day for the Russell 2000, it's going to be difficult for the Russell to gain any legs with high beta momentum stocks getting sold off. S&P 500 really had a very weekday today, being rejected right here at the 50-day moving average to close within the bottom 50% of today's range. So to me, that's a weak candle. PCT today also looking like it's trying to put in a bottom here. We'll have to wait and see if we get within the next 1 to 2 days a reversal. But I think the first test for PCT is above 650. INV today was able to fight off early weakness. And if we get a low close doji tomorrow, this is a very powerful candle. That's a hammer with a very long tail. It did hit a low today of $2.72. I'm going to try to look at creating or getting into a NASDAQ short trade today, because we had the NQ futures break through finally, break through and close below this major support level right here. This goes all the way back. Now the NASDAQ and the Qs have already broken. So I'm going to look to express that through the SQQQ, which is the ultra inverse of the NASDAQ market. I suspect that this trade, like any trade at the moment, is going to remain choppy while we remain hostage to the great orange one's tweets and the ongoing back and forth circle jerk of peace and war with Iran in the Middle East. I think this is going to be a very long, drawn out process, too. We are not dealing, or the US is not dealing with its normal type of adversary. And I think that it's going to require a dramatic increase in military action to finally force them to actually negotiate in good faith, or there's going to be some level of a negotiated deal, which I don't think Trump's pride is going to allow him to do. VIX today was much higher, close to the $20 level, but it too closed at its bottom end, or the bottom part of the 50% range of this daily candle. When I look at whether or not a candle is a bullish or a bearish candle, I do not look at the color. What I look at is the range and to see where we closed for the day. And this is slightly weak since we closed below the 50% level. Overall, pretty boring day today. Lots of chop, lots of quick action in the NASDAQ market today, while the ES market didn't have the same level of percent range. So it was obviously a little bit quieter today. As I said earlier, I've been doing a lot of sitting on my hands, just waiting for the overall market to finally break out of this choppiness. It's very easy to see if you look on any of the daily charts. This is a never ending. Now we can push this all the way back to May 6th. So we have been in this now for over 2 months. We are not the only ones frustrated. I think that, well, I know that professional traders are frustrated, and it's very difficult right now to put any type of swing trade position on. Only trading I really see is rotation on a daily basis on out of whatever stocks are getting hit into more safe haven stocks. So, and I think that's going to continue at least until we get better visibility, which means until this fucking war starts to truly wind down, which I don't think is going to happen for some time. So, continue to be patient, protect capital, and I will see all of you in the boardroom tomorrow.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping.